Good evening, wizards, and welcome to episode 9 of the Crypto Wizard podcast. Now, I hope you guys are having a good week so far. We are nearing the end of the week. We have many interesting things to discuss, and more importantly, I hope the green in the market has brought you many profits and much more prosperity in this reckless Wild West market we are all involved in. So, it's been an interesting week to say the least. I mean, many people would not have anticipated BTC to have reached such a magnitude of a level so fast. I myself did not anticipate it to reach this level this quickly, I'll be honest with you. Although I anticipated this exact level, this speed at which we reached it was phenomenal, and it's very good to see. However, the main topic of this podcast will in fact be mostly this topic. It will be discussing the possibilities of the upside, the downside, and more importantly, the psychological aspects that will kind of evolve around this whole bias and mindset and what it really takes in this market to succeed and see it in a much more positive light and in a much more clearer light than the majority of the market. Because as you may have known, I've been going through Twitter and all we seem to see is these crypto cartoon people or many other pages just jumping on bandwagons. I'm checking the news articles right now, and even the news articles have been slightly altered and twisted. A good example was the tweet I posted earlier regarding Fidelity. Now, one of the articles I saw was Fidelity are looking to invest very heavily into XRP, which is a very misleading title, which would definitely not be the case if the market was going lower. So there are crucial elements and good signs that the market could now potentially be reversing. And again, it's all about using a factor of everything that's going on social media, everything that's happening on Reddit. I always use Reddit, the cryptocurrency subreddit, to see what the overall bias is. The memes are flying, the bull run memes are flying, and what a positive sign that the market is very likely going to pull back. However, there's no confirmation yet. We're still waiting on that weekly candle closure, but the signs are looking more better than ever. So let's remain focused on that for now and kind of focus on the Fidelity side of things, like the media outlets, because Fidelity is launching soon. This is also a big discussion where they will be allowing the spot trading, etc., and overall trading for institutional investors. This will be a purely institutional investor platform, and they will be starting off, I believe, with BTC, Ethereum, and XRP. So despite the very misleading titles, it will not be Fidelity themselves looking to hedge extremely into these crypto assets. They will simply be allowing institutional or financial institutions, for example, to trade these assets. So we have this weird ideology in the market that institutions, banks, governments, etc., just simply want to continuously buy crypto and make the market pump. But many people do not realize this is not relevant to where the current pricing points are at. And although we do have institutions on board, and we are most definitely at the peak of the most volatility and manipulation this market has ever seen, we can often get ahead of ourselves in quite an extreme manner, and it's quite unflattering to see this consume the market right now once again. However, as professionals and as calculated traders and investors, we, the wizards, the community of like-minded wizards, we have breached 20,000 people in the Telegram. Guys, I don't even know what to reply or say to that. Just thank you so much. We are growing at a crazy rate, and I consider every single one of you a wizard indeed. So considering all of us wizards are a bit more like-minded and calculated, we're all working together, we're all trying to work upon the same wavelength. That is why we are providing the content for free over here. We are just giving everything away because I want everyone up to par on the same level. And I'm seeing a big shift in mindset, especially amongst the wizard community, on how we are approaching this situation. And the amount of clarity and level-headedness that I'm seeing from your tweets, your DMs, your messages, it just shows how far people are exceeding expectations to actually become a better human being and a better trader and investor. So when you're looking at what's really going on in the market right now, we're looking at the likes of CoinMarketCap today. Let me just refresh that. BTC dominance almost at 59%. That is crazy. And even today, BTC is now officially down for the first day after this huge green run. This is a big problem. Many people look at the color of a candlestick to determine where the market is heading next, but unfortunately, the color of a candlestick is meaningless. Completely meaningless. So the reason being is the candlesticks are a representation, so to speak. I've mentioned this before. Candlesticks are a digital footprint, which is a combination and collateral of human emotions, human psychology, and just overall irrational behavior. humans in general are very irrational people. We are pretty erratic, and our emotions can often get the best of us. Now imagine this in normal life anyway. You have people that are going through euphoria, depression, all kinds of crazy emotions. Now imagine every single one of these human emotions elevated tenfold, just flung onto the market. It's like someone's just got a machine gun and just sprayed human emotions on the market. And that would explain the volatility in the crypto market as well, because we have the human the human emotional tendencies flying up and down, and then we have market manipulators who are greedy, money hungry people who are destined with one simple purpose: to not allow you to win or succeed. And they do so by playing with your emotions. You have to realize that the candlesticks are human emotions in candle form. Every bullish candle you see is not only just manipulation from a bank or government or whale, it's also human beings like ourselves, like retail traders, who are basing decisions off the color of a candlestick. It's a weird candlestick inception ideology, but I'm hoping you can understand what I'm saying here. We are basically amassing all of our data within those candlesticks. So we shouldn't be looking at the color of the candlesticks, but we should actually be looking at what these candlesticks are closing like, what they're forming like, what the wicks are showing, and at what specific level these wicks are forming at and reversing from. Fibonacci is one of the longest standing indicators / technical analysis factors in the market that has been spanning for generations. And Fibonacci formed pretty much since the Latin speaking world was actually developed and began to progress over time. That is how far back Fibonacci originates. And if you actually dig a little deeper, I'll be covering this a lot more in the future as well anyway, but when you actually look into the principles and the overall origins of Fibonacci, the golden ratios and all these numbers, now, it's become a self-fulfilling prophecy, just like technical analysis has throughout the markets, but it comes through with consistency every single time. And if you just zoom out, because this is the biggest problem right now in the cryptocurrency arena, nobody looks beyond or further than the daily time frame. And we are so fixated on the daily movements of BTC that we are not realizing that all of these daily movements on the BTC are just simply driving price up and down towards an overall longer term agenda, which you can pretty easily spot and identify upon the weekly and monthly timeframes. They are your biggest giveaway to where price is heading next. And what's funny is the majority of my analysis is now done from the monthly and the weekly, and I've covered this in many videos for you guys as well, literally showing you how to do top-down analysis and further dictate where the market could be heading next. And when you combine all of these principles all together from an overall much larger picture, you're giving yourself room to predict long-term trends spanning potentially months. You're also then giving yourself an opportunity to catch moves in line with the overall trend, a move in synchronization with the market. It's a very easy principle once you get the hang of it, although it will not take a very quick amount of time, so to speak, to pick all of this up. It will take a long time, it will take practice, it will take studying. But when you begin to study the overall analogy of a candlestick, almost breaking it down like a human body, you're looking into it on its deepest layer, you're looking into it on the thinnest layer even, and you're just breaking down those candlesticks, especially on the 15 minutes, etc. Although I do not recommend using these on the cryptocurrency market too frequently, when you actually see price at a key level reversing and you start dropping down from the monthly all the way down to even the 15 minute or the 30 minute, you can start to predict and understand how human psychology is working around those specific levels. And it's literally giving you a complete x-ray of human emotions and psychology, all broken down step by step, minute by minute. And it's crazy that we cannot look beyond this, and it's become a big problem in the market. We're so fixated on indicators, moving averages, golden crossovers, all this stuff, and yes, they're beneficial, but is it a 100% indicator? No. Indicators are always an addition, they are a supplement. It's no different to being a bodybuilder and taking a protein shake. You do not simply live off protein shakes, you take it as a supplement or as an addition to your already existing diet and infrastructure of your daily routine. It's simply an addition. We cannot use them as a go-to all. The same way I look at candlesticks for pretty much the majority of all my analysis and key levels is because the candlesticks is what is representing the data. We are trading candlesticks. So why would I base an indicator on my decisions when realistically the indicators are based off the candlesticks anyway? It's up to you as a human being to read through those candlesticks. If anything, in all honesty, indicators are simply expressing the candlesticks in a more complex and complicated form. It doesn't matter how they're shown, how they're labeled, how they're diagrammed, or how they are presented on a chart. They are simply overcomplicating overcomplicating what is already present right in front of your eyes. So I think it's time many of you have to branch out and look a little bit further and start examining the overall dynamics of monthly, weekly, and daily timeframes, because they can really paint a very solid picture. But then it goes without saying, why is the current market bias so bullish? Why are we even rising? To be honest with you, there is no logical reason, there are no fundamentals driving such a significant surge in the market right now. This is a classic case of manipulation. And yes, we can very easily break higher, which I'll go into, because again, there is no bias here because the confirmations have not yet been set in stone. But it is very well worth looking into the possibilities that could be occurring. So when you're looking on the fundamental aspects of the market right now, has anything really happened to significantly bolster price this high? I know many people are saying institutions are loading up, blah, blah, blah. That's simply just a myth. There's no confirmation. Nobody has said anything like this. There's been no news. We have no proof. It's very easy to say that when there is no single source of backing whatsoever. However, we can look at the facts and start counteracting what is actually going on in the market right now. So we already know, does this market have any form of rationality or logic whatsoever? Absolutely not. However, when you look at the market pumping, but then you look at the inverse correlation with the news, for example, the real news, not the fabricated news that most of the mainstream media outlets for crypto will publicize, or even the actual mainstream media outlets in our own countries, the actual main ones, for example, in the UK, that would be the Daily Mail, the Sun, etc. All of those completely rubbish and trash newspapers, which you should hopefully not be reading at any point in your life whatsoever. All of these outlets are covering news that hopefully should at least be real to some extent. A good example is Bitfinex, the current Bitfinex issues, the USDT. USDT have, again, I think it was only a month ago, they've changed their T&Cs, terms and conditions, to state that, again, they are not a one-to-one backed with an actual US dollar reserve, which means for every $1 worth of USDT, you are meant to technically have a collateral in reserves of one physical US dollar. However, they have changed their terms and conditions once again to pretty much state it's not the case. And I think only 70% is now allegedly backed. However, I would definitely and heavily speculate and bet it's way less than that, if they even have any whatsoever. And I think the Bitfinex scandal that's been going on now, all of these issues occurring again, losing funds, etc., and using the USDT as a collateral, I do not think there is that much USD in reserves, to be honest with you. As for Binance, again, CZ has spoken out, the CEO of Binance, stating that he would have no purpose whatsoever to inflate the price of BTC, as he's obviously just lost allegedly 7,000 BTC. And first of all, this is a big reminder as well to keep your crypto off exchanges. I do not care how reputable they are, how respected they are, how much volume they have daily. They can be hacked. These centralized exchanges, you have to remember, they are centralized. The reason being is they are technically an intermediary or a third party, just simply handling transactions back and forth. You are not in possession of your private keys, and this is the biggest misunderstanding many people have in the market. You are not in possession of those private keys. So imagine as a hacker, you are looking to make as much money as possible in the shortest space of time in a market that's fairly unregulated. Where would you go to make multi-millions, even hundreds of millions, in practically a matter of seconds in one single move? If only there was a database or a company that held not only centralized KYC checks, know your customer checks and regulations, AML, anti-money laundering regulations. If only there was a company that held multi-millions worth of people's data, personal data, and alongside that, people's money, which they have no control over themselves, and private keys, which if you hacked into their platform and back end, you could gain access to and then to run away with the funds. Where would I go as a hacker? I would go straight to every single crypto exchange in the world, pretty much. Even the decentralized ones now, they're not really significant enough or trading enough volume to be too considerate. However, what's interesting is the Binance decentralized exchange is a process that is underway and in the works. And what's a coincidence that just before they're launching, again, you know, I'm a bit of a tinfoil guy. I like to speculate. I love my conspiracies. I love my aliens, my Area 51. I love all that kind of stuff. The Egyptians. What else do I love? Antarctica. That's a big conspiracy. But I think this conspiracy here is bigger than them all, and that is the Binance DEX, the decentralized exchange, coincidentally being one of the only real serious ones, considering how big Binance is, now being pushed as an alternative. And CZ actually tweeted, I forgot the exact tweet, but he literally tweeted along the lines of saying that if there was ever a hack, then he should definitely be looking at, people should be looking at the decentralized exchange instead. So there is a bit of a sticky situation here where I am a bit double-sworded on this whole scenario. I do not really know what's going to commence with that, but excuse me, choking to death. So, losing my voice. What is going on here? Talking too fast. So, when you look at Binance and Bitfinex and you consider that not only has money been stolen, but withdrawals have pretty much been banned, and so have deposits. People have been unable to get their money in and out. So when you're looking at one of the biggest hacking scandals pretty much in the market so far, besides obviously Mt. Gox and all the other scenarios we've had, when you look at how big this scenario actually is, you have a Tether and Bitfinex scandal, you have Binance being hacked for 7,000 BTC. How do we justify BTC going up to $7,400 in the same week that all of this drama has occurred? It does not make sense whatsoever, and it's pretty erratic. However, what does make sense is the majority of people cannot get in and out to sell their crypto, so there's definitely a reason why there has been no sales on crypto. It seems that people are just buying because nobody can get onto their platform to even make a withdrawal, so they're too scared to even sell. So the theory here is if you cannot withdraw your crypto or your fiat, you'll be too scared to even sell your crypto in case it does continue rising. So people are just simply leaving it there as it continues being pushed higher. Now, how could people be pushing it higher if they cannot get their money onto exchanges? Well, the beauty is there is something called insider trading, and again, it's been proven many times there are internetworks of people involved, especially high authority people in the crypto space who pump and dump the markets, and they have a mass authority to do so. And not just that, there are whales. We underestimate the power of whales and how many people have several tens of millions and work in orchestrated groups to pump and dump the market. This is no conspiracy. It's a very well-known fact, and all you can do is research a bit of this on Google and you'll see very clearly how this happens. If it's not miners, it's literally the people who invested in the early days. And when you actually think about this for a second, there is a very small community of people, like-minded people, that invested in the market from the very early days. These people amassed a fortune that is a very secret. It's literally a secret. We do not realize how many multimillionaires or billionaires there are out there in the world who are not on Forbes lists. You have to realize this. Not every single wealthy person in the world is on TV or a celebrity or on Forbes lists. There is much more to it than being a internet celebrity or a global sensation. There are many secret millionaires and billionaires as well. There even used to be a TV program on this once upon a time. So when you look at all these people who are once involved in the investment and the growth of the crypto space from the early days, it's not really a far-fetched to believe that these people have realized that it is best to work together in secret networks, essentially, and orchestrate pump and dumps in the market. So the reason I'm looking at this specific level as well is it's a Fibonacci 78.6 for BTC. If you actually look at one of my prior videos from April the 2nd and even further back, I've been covering this since BTC broke 6,000. And I think I even covered this in the early podcast as well. This level was preempted by all means, and we've been anticipating this for a long time. We've caught as many longs and shorts in between this Goliath movement from around $3,400 to $7,000 as we possibly can. However, we did manage to miscalculate just one of the final ones. We sat back, we were a bit patient, and now we are seeing this unfold in all its beauty. So now that we're looking at this, and again, just focusing on that daily time frame perspective, everyone's looking at the daily and just seeing green, 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 red, green, 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 red, 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 green, 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 green. So all they're thinking is, oh my God, it's not going to end. It's the bullish breakout. We've broken 6K. We've broken 7K. It doesn't mean anything because there are other factors at play. We have the lower lows and lower highs forming. We have a potential trendline breakout. We have all of these trend lines that have been shattered and broken, which could very easily correlate. And let me just drag this trend line down as I talk. This can very easily correlate with BTC falling straight back down to at least $5,000, which I see as a huge possibility in the short term as well. I can't believe we're underestimating we're actually underestimating the capabilities of this market. If you simply go to that weekly time frame and trade upon just a weekly time frame perspective, if you were to enter literally a very short position and just execute trades off weekly Fibonacci's, I do not think you would ever lose if you had a wide stop loss, because every single time the weekly Fibonacci's fulfill themselves, even if it looks like price is so far gone at the point of disbelief. A great example was when the bull run first broke out. We broke through we fell just short of $3,000. We fell all the way back down to 1,800. I'll be honest, a lot of people got scared. Price then rocketed to $5,000. That's it. We're never going back. It's bullish from here. Imagine how many people entered long at $5,000. And then guess what happened from there? BTC fell all the way down to $3,000 once again, and then rocketed straight to the Fibonacci levels of 5,800 and around $7,000. The market can move in huge bulks of momentum if you actually zoom out and look at it from a longer term perspective. What you're looking at on the daily may look incredibly erratic and bullish, but then when you go to the weekly, you realize, oh, it actually done that in a week before, and then the week after that it absolutely reversed tenfold. So it's all about opening your eyes and looking at this market in a different perspective. So I think the overall goal of this podcast is to simply enlighten you on the possibilities and a different outlook on the markets overall. I do not want to kind of go into this too much in depth. I just want you guys to kind of wake up and view everything in a different limelight. You do not need to jump on the bullish momentum. This is the biggest problem with the crypto market right now. Again, I covered this before. These cartoon pages with hundreds of thousands of followers on Twitter, they're called like meme lords or crypto lord or alt lord, like all these crazy names, and it's literally random people. And I'm seeing some of these people and they're just like, they are literally erratic. I've never seen anything so crazy. The minute BTC goes bullish, they're like, that's it boys, buckle up, time to ride the wave. And then when it falls, they're like, oh no, we're falling, it's over. Hodl, 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 dollar cost average. But it's like, we need to be calculated. We cannot just shift in line with every single decision that's made and then stick to that bias. That's the biggest problem. A directional bias changes in the market and the whole market jumps on board and clings to it with 100% hope. Whereas professional traders are a bit more calculated. They do not see something and just think short or long or buy and sell. They actually look at it and think, okay, we'll now wait for this level, and some of the best traders I know who can get the best entries. For example, some of the trades we got today were very precise, or even last night, those executed trades, the precision was unbelievable because I'd preempted that position, that specific level for an entire month. It's not just looking at a level that hits and being like, oh, it's support or resistance, I'll close out. No, it's sitting there and waiting days, weeks, or months for a level to unfold. And when it finally hits that level, again, I've covered this as well. The way to kind of get consistency in the market, and the reason why, if something or a trade ever goes wrong, I'll take a break, I will simply sit back and let the market unfold and find a better situation. If you're not in synchronization with the market, you will never succeed. You'll just get a few sporadic trades that will work out well, and then the rest will be losers. Because you're not in sync, you're simply looking at short-term movements and trying to preempt and predict price ranges that are not there. However, when you're in synchronization with the market, using the monthly and the weekly, you focus on these extreme long-term calls for Bitcoin, which could be several thousands of dollars. But guess what? As they slowly start nearing those levels, or they hit that level, you know that you've made a call a whole month in advance and it's hit that level. You know damn well you can short that level, or you can buy that level, or you can enter trades upon those regions because it's taken several days, weeks, or months to fulfill, which shows the validity of such a level. And that means you are now officially in synchronization with the market. So from there onwards, anything you take on an intraday, or swing trade bias, you know you have literally put every single confirmation in your favor. And again, it's never guaranteed in the market, but the more you kind of stay in synchronization with the market and you stay, even if you do not trade 3 of the setups you take, and then you see them unfolding towards one of your final setups or another setup, you know you have the confidence to take that trade. And even 1 or 2 trades a month in the crypto market can provide substantial profits if you are not even consuming too much risk. You can literally go low risk, fairly wide stop loss, and let the trade swing. I promise you now, if you focus on the weekly and monthly time frame, very simple stuff as well. There's no need to really elaborate on this too much, but I promise you, if you just remain focused on these specific time frames in particular, especially for crypto, you will find yourself consistently out trading and outplaying the majority of the market. And that's why I focus on them so much, because what the problem here is, many people just stick to the daily and then they look at the weekly a little bit and they try and do all of this stuff that would only work in the forex or stock market. However, in reality, it can often be different. And the reason I always keep 2 biases and keep it sensible is because, let's just say we're at a very strict region of support and resistance and price is looking to break out. We do not simply enter long because it's going to break out. we do not enter even if it breaks the resistance, because this market can prove to you that breaking resistance doesn't mean a thing, and breaking support also doesn't mean a thing. It can very easily do it for a whole day or even a week, and then the weekly candle could close back below or above that region by the end of the weekly closure. And sometimes this can happen in a matter of minutes or seconds, literally before the weekly candle closes. But for a whole month, it will be trading at a very, very concerning level. So you have to be open, you have to be patient, and patience is the most consistent and most important factor you can have in this market. So I'm just trying to preach here to some extent. This is borderline preaching that you need to take a more laid back approach to your trading. I mean, literally sit there, look at the charts, and treat it as if it's a set and forget mindset. You obviously have to be alert. You have to be managing those stop losses, those take profits, because the market can move volatile. When it comes to identifying where price is going next before executing and identifying crucial setups in the market, put every single bit of your focus on those monthly and weekly timeframes, and I promise you, you will become a better trader. Now, guys, that is pretty much the most important point I wanted to cover for this podcast. I wanted to keep it short and sweet and just imprint a very strong mindset into your brain, because coming into the week ahead, we have a very interesting scenario unfolding, and following this weekly candle closure, for all we know, this could end up being a very dramatic reversal. And even if we see the likes of $5,000 or $4,000, we have found a very satisfactory entry for a potential long position to catch the now remainder. Because the next time we go upwards, if we reverse from this level, we are looking at the likes of $8,000 to $10,000. And I can almost assure you that will be the exact unfold of movement if we see a very sufficient pullback. So I am hoping to see a potential $4,000 pullback for the time being. Even if we do not hit the $1,300 region, if we can see a successful pullback from this zone, I'll be more than happy to claim success, knowing we caught a very significant trade against the overall market bias. But not just that, moving into next week, we could be seeing a retest of the $7,400 region as well, just to remain cautious of. So stop losses, etc., keep them tight, keep them in profit, because if it pulls back, you can simply close out in a profit and then re-enter again with a bit more capital in your overall account balance to catch the same move down, as long as all the principles abide with each other. So it's going to be a very interesting week and a very interesting Sunday evening weekly candle closure. I honestly cannot wait. So goes without saying, I'll leave you on that note. I will be providing a lot of consistent updates on the market throughout this whole period. Rest assured, maybe we'll have a breakdown every day or Telegram updates. Regardless, I will ensure we are staying on top of this market 24/7 during this very crucial make or break period. So guys, have an amazing, or guys and girls, have an amazing Sunday evening. I hope you're all getting some good rest, because we have a very interesting week ahead of us, and I cannot wait to see if it is truly going to be the destroyment of the bulls or the bears will thrive. Let's see. I cannot wait either way. If you're a long-term hodler, you benefit from the rise. If you are shorting, you still benefit regardless. So either way, as long as you're doing both, you will remain a winner in this market, and I'm here to guide you towards every single step of the way to that successful ending. So guys, have a good Sunday, and I'll see you in the Telegram very shortly.